Hey everyone, sorry about that. What a way to start and come back, right? Yeah, we'll get going here real quick. We've already got quite a few people. I'll just come up live here. Hey everyone, it's glad to be back here. Sorry about the rough start there. That was interesting. I thought everything was running fine and then nothing would work, but it looks like most things are working. Still getting some things set up. Just a quick intro here. You guys didn't do a very good job taking care of the markets when I was out of town. This happens every time I go out of town. So next time that I announce that I'm going out of town, just go short. It will absolutely pay well. It always does. I used to have a lot of my institutional clients go, please don't go out of town. So anyway, it's good to be back. Markets are pretty crazy. I love comments I saw when I started to stream a minute ago. Somebody, just buy SPY. Don't buy SPY, okay? Don't do that, okay? It's not the buy the dip kind of market. And if you look at what we saw in yesterday's action, you know, the big reversal off of 4,200 all the way up, right? Printing up this morning or overnight, we were at 4,303 and they welcomed me back. I was able to get a really nice short position on last night. I'm like, holy crap, they're giving away money because there's no way this thing is going to follow through. Anyway, so that was a nice way to start the week off. Those of you that are hanging around and you have the indicators, make sure that you know that tomorrow will be the live room. Wednesday, Thursday, Friday, live room, 1 o'clock to 4 o'clock, all 3 days. We'll go into the close, probably focus in on trading tomorrow using the trading view indicators, all that kind of stuff. So let's talk about a few things that's going on in the world, right? We're seeing a huge flight to safety going on. There's a bid in the 10-year right now. We're at 2.77. We got up to the 290s and they don't want anything to do with 3%. I discussed this a bit before I went out of town. And I think that the scenario that's playing out here is going to get very interesting. What's going to happen in interest rates has nothing to do with inflation. I tweeted out a picture of the coast off of Shanghai and all the boats are out there. It looks like somebody commented on Twitter, it looks like an amoeba is attacking China. And there's this backup. There's going to be yet another surge, I think, of inflation. This is not peaking out. All the bullshit that these guys are saying, Yellen and all of them, they are just shills for whatever. I mean, this is ridiculous. They're trying to keep the people safe by lying to them, okay? I tell you what, I'm super thrilled that Elon is buying Twitter. I feel like all these platforms, I feel like a free man again and being able to speak my mind. And I won't go through a lot of stuff. I'm watching markets trading. We're below 42 handle. I'll dig into the markets here, and then we'll circle back maybe, and I'll take some questions or maybe even cover some stocks. I'll spend about probably an hour and a half from here. So if you folks want to hang out, I'll hang out with you. So we'll see how many folks that we get on board here. And I know this is impromptu, but I was just dying. This is the first time I've been in my office. I was, as I mentioned, I'm brushing off all the cobwebs off of the equipment here. Literally, there was some cobwebs. It's kind of interesting how fast spiders go to work. But yeah, so everything was running except for I should have rebooted and I didn't. So I apologize. Won't do that again. I should know better after all these years of doing these broadcasts. So I thought, okay, I'm good to go. I can get up there, really get going, but that's not the way it worked out. So we're seeing a bunch of stuff. I'm just looking around here. Let me go to this other screen. And let's just so I can talk to you and look at what's going on. Bitcoin's getting hammered, starting to take, I'll cover that here shortly. But we're just looking at everything underwater. We're down 2.5%. The industrial's down 700 again. They were down 900 on Friday. Friday was a disaster. And those of you that follow me on Twitter, it's / portfolio expert, no E in the expert. So portfolio and then just the X per. And, you know, I was just talking about our database on Friday. We got no traction. It's like it's broken. I'm like looking at all these stocks and we're not getting any buy signals. So it's obvious why. And I've been here before. Somebody asked a question that I think it was on Twitter. So hopefully they get this. But they asked, when does the database get oversold? It doesn't. Okay, it really doesn't. In 2008, when things were horrific for a longer period of time, we stayed sub 18% bullish for, I believe, 4.5, 5 months. And what we'll know is when we start to see batch groups of orders coming back in, and we'll see that on the short term. So I'll just set this up a little bit. Is right now we're just not seeing anything good happening on the database at all. Most of the stocks are slumping pretty big, and we're just not going to see a lot of traction here. This move down, I tweeted out earlier, remember 42.12? Well, you know, we bounced off that yesterday. We just took it out like it didn't exist. It was bouncing around there this morning. And in fact, took some profits on the shorts just around that level, I think 08 or 14, something like that. And I had stuff to do, wanted to get over here and do a live stream for the last hour with everything that's going on. So down 2.5% is a big deal. And when you start to look at things, you know, we saw this big collapse in crude yesterday. Crude has just flashed right back. Crude's going to stay around $100. It's going to stay in that range that I've talked to you folks about for a while, between around 95-ish low. I think we printed 93 up to about 106. We're just going to be locked in that range. What happens out of this pattern will tell us a lot that what's going on. And the inflation surge, and I'm just kind of circling around back to where I was talking about, is the inflation surge that is likely to come is going to be the supply chain is going to get screwed up. It's already screwed up. You just don't know it yet because there's a 3-month lag probably in seeing things. So I would say make sure you have plenty of stuff around, something other than toilet paper. I'm joking, of course. But the bottom line is there's going to be some disruptions. The situation in the Ukraine is disrupting a lot of the wild fishing. All kinds of stuff has just been screwed up at levels you can't believe. And I think there's going to be way, way more challenges than people think. And I know that I'm just I'm kind of on a mind scramble right now. There's so much going on, just getting in front of you folks for the first time, but we're seeing a lot of situations that are starting to arise again. And I remember talking. It's hard to believe it's already April's almost over, but I remember in the fourth quarter of last year talking about that the economy is going to hit this wall, and it kept kind of going and pushing through further than I thought and longer than I thought. And it's one of those things where you have to be patient sometimes. Timing is always difficult. And I told you folks when I was on the trading floor, they called me Dr. Given because I would say it's a given, just buy it, sell it, whatever. It's going up, going down. It's just going to happen. And then somebody would say, well, when? I go, I don't know. It's just going to happen. So you have to make sure when you're doing looking at markets, playing analyst, playing trader, whatever it is that you feel like you're doing, you have to be able to be patient about those things. So all of a sudden, I think the metrics that we're going to watch going forward, I kind of feel refreshed, to be honest with you, taking a little mini break like I did. But one of the metrics we're going to have to watch is employment. We're going to see, on Thursday, I don't think the effects are going to start to show up, but we're seeing like crazy levels of claims and continuing claims. They're way below historic levels. And it's even bigger than that, because I think the tight labor market is even more interesting as we look at it, is that we're looking at percentage levels. They're measuring this is the lowest percent or lowest number of claims. Well, going back to 1980, if you compare the population of 1980 to now, it's even way lower than you can imagine if you do this and normalize it and use percentages of workforce at the time. This is incredibly low. Basically, there is no one else to work. There's a shortage of workers out there, and labor is just going to get tighter and tighter, and that probably will be the next place of inflation as well. Is we're going to have to be competing for bodies. And I think Elon Musk was right when he said, I saw a recent interview, I think a TED interview that he did, there was 2 of them, and he was talking about I guess there's no supply of bodies to do things. He goes, you don't have to worry about robotics taking over everything. We're so under everything. We don't have enough of anything. And what we're seeing, I think, on the planet, the disruption in COVID and everything that happened there, it was just it really did cause a shift. Not necessarily the Great Reset, I'll do air quotes, not the Great Reset, but the shift of where people are moving. And we saw that for the last couple of years. We're still seeing population shifts. We're seeing a lot of things that are happening. So this is going to be a very interesting window of time as we go forward here. And it's not going to be, how's the best way to put it? This is going to be even, I think, more challenging in some levels than even 2020 was, if what I'm seeing continues to unfold. I'm actually hoping that I'm wrong on some of this stuff, but I will start to, as I get back engaged, I did a fair amount I had some time to do some reading and some studying while I was gone. And there's some interesting things going on out here, folks. And the challenges are going to be absolutely huge. You think we're through this thing? No, we're not. And I think the markets are starting to recognize that. So let's go ahead. I'll go through the markets. We'll come back. I'll look at some of your comments and see if we can keep this going. Like I said, I'll probably do about an hour and a half. So we're maybe, let's see here. We're 14 minutes in. So we got lots of time to hang out together. Let's focus on this market right now as we're coming in to about 20 minutes to go. We'll go through and watch the markets trade, and that will give us an opportunity to kind of get into the groove there. After that, we'll come and I'll come back and I'll take a look at some of your questions and stuff. So here we are. I'm looking at the ESs, and those of you that I'm cranking something up on the other screen here. Just I think it's going to come up over here. Nope, good. I'm going to bring up the trading view indicators and some of the stuff that we got going there, just so you can see what's going on. But looking at this from a market grid standpoint, right now we're looking at market grid right now. 4167 is STX. We printed below the S3, which was 4196. We've taken that out like it's not there. Look at the acceleration that's going on in these PPMs. We're looking at minus 0.37, minus 0.51 in PPM 1 and 2. And, we're just not, this is huge acceleration, folks. I know I hate that I was gone during this period of time, but let's take a look and switch over to a weekly real quick to get a little more perspective. For this week, we're looking at, right now, the low's been 4178 for the week, and we're looking at S2 4180. So we printed S2 weekly. The next level, 4134, 4093, which is a retest of the lows. I'll go back over to this low over here, 4093.25, exactly the low. It's interesting that the weekly STX number, based on volatility, based on a Fibonacci process that's embedded in this indicator, 4093.25, an exact retest of the lows. And so there's one, I guess we'll call it, there's two levels of support, 4134, 4093. And I'm going to take this to the next level. And I just want to bring this up because this is an interesting thing here from the standpoint of what's going on in this is the monthly graph I have up here. All of a sudden, and I talked about this, we are coming close. 4083 is the 21-month moving average. PPM 1 is still up at a plus 1.16, but look at these PPMs here on the monthly chart. They are all rolling over. We're starting to look like we're heading to potentially 3,500. That's not going to happen overnight, but they're starting to look like bigger numbers. I've heard 3,800 numbers so many times watching a little bit of CNBC trying to stay in touch over the last several days. Well, I think it's going to 38. Well, it's not going to go to 38. It's going much lower. And this is going to get, I think, more serious. Although I'm going to, I talked about there's a pretty good chance if we get down to that 4083 that we get a little bounce because it is PPM 2 at 1.16. The probabilities say that it should hold that value. So we may get a little mini bounce, but then all of a sudden, if we get down that low, we're looking at 4,200 being a major resistance. So trading maybe 41, 4,200, and then bleeding off some more of this momentum, especially on a secular level. And we're starting to see all the PPMs turn down. So I'm hoping I have this chart available. I kind of screwed it up on TradingView. I'll bring that up here in just a minute. So this is going to be, we've got some serious things to watch here over the next several weeks. And I think it's interesting because what I've got, like I keep pointing out on our database has no traction in intermediate. It says there are virtually no intermediate trends at all right now. 15% of the entire database is long. And that's, I can bring that up maybe here in a little bit, but I don't think it's as important. But we're looking at, this market really on the edge of a complete collapse. I think like I said, this number that I just was talking about right here, 4083, if that number doesn't hold, I realize that's 100 handles from where we set at the moment. So if that number doesn't hold, then we're looking at next level 35 plus. And from that point, then things get even more challenging. And I want to kind of go back to something that I talked about while we're in this mode right now. I'll catch us all up. I will go live again tonight at typical time. I'll be live at 9:30 Eastern time tonight. But this was just kind of a warm up. The markets were going. I wanted to get re-engaged with the community and get everything going. So, but I'll tell you that that what's happening here is starting to evolve. If you go back in January and watch the video that I did in January, I'll have to get the name of that. Matter of fact, if I think about it, I'll make sure we put a card on the video so you can get to it easily on tonight's video. I'll make a note to do that. But what I talked about in January, after the end of January, 1st of February, that we had an outside reversal on a monthly basis. And I said, if we close lower and in March and we close under a certain level, which we did, then that would confirm a outside reversal on a quarterly basis. And then here's the big caveat for everything is if we close lower we have to do two things. So this is really important. Between now and the end of June, we need to make a lower low. So we need to take out that 40.90 number. If we print down to 40.80 or 83, that's enough actually. We get down below that level, then that is going to set up the scenario that we're now going to get a confirmation of somewhere between a 3 to 6 quarters of negative closes. And I'll be focusing. I told you folks back in January that was going to be one of the contexts that I was going to be talking about. This was going to be a theme. And, we started off basically worse than we did in 2008. And now we just have a complete cluster going on. And now we're just seeing everything that's been wrong in the last couple of years just completely unravel. And this is why I'm talking about another supply chain disruption. I mean, even Biden's telling you there's going to be food shortages. You should have some extra stuff around. And, so, it's just crazy what's going on right now. I don't know if you guys have seen all these food processing plants that have all these strange things where they've been destroyed. 2 of them got hit by an airplane. How does that happen? 2 separate places got hit by airplanes. What's going on? Is somebody sabotaging the food chain here? What's going on? So, there's something going on here, folks. I hate to sound like this doomsayer here, but there's some things going on, and markets are picking up on it. And I think we're going to see a full-blown correction, not 20%. I don't know who came up with the of this whole 10-20%. It's in a correction. It's all that kind of stuff. Bear markets are 20. That's just something to put in a headline. The bottom line is we could see full-blown. I'm going to go a little rogue here. We could see a full-blown 40+% decline if this thing gets out of hand here. It's where I live right now. We've got a giant, just about 15 miles to the north of where I'm sitting right now is a major forest fire. And I can tell you that what's going on right now reminds me of that situation, that once you let certain things get out of control, we know for a fact a friend of mine is a fire chief, and I just met with him this morning. I spent about an hour with him this morning, and he was telling me that the Forest Service totally, it is unbelievable what they've done. They actually let it burn. Now they've lost control of it. They thought it would stay in the can. Anyway, That's what's happening with the financial system. Everybody seems to think it's going to be fine, but the Fed's trying to pull back. This is a classic point that I know I talked about actually several years ago, back in 2018 when we were in the taper tantrum. It looked like things were going to roll over pretty big right then, right? The Fed did some things, as always, and they stepped in. They're not going to step in. Everybody thinks they're going to soften. They can't. This supply chain situation that I'm talking about gets worse. It's not, they're screwed. It's not going to happen. So I am just telling you right now that I would be very, very cautious with just about everything. That if you own anything, it's going to be pretty difficult. I still think the oil patch has some good things there. I'm going to probably cover that in Thursday in our live room. And so let me bring up a couple indicators here. I just want to bring this up because I want you folks to see this. And this is the trading view, and these are the indicators. And you can get these indicators, kendallreport.com/indicators. But this is all the labels. We've got price objectives. Right now, we just generated a new price objective on the downside for the market to head down to around 4169, 4160. This is a 5-minute chart that we're looking at on the left-hand side of the screen. All these little angles are the pivots that are marked by the indicators, letting you know where things are going to happen. I found something very interesting, and I'm going to try to put something together for this. I found a presentation I did in 1994 showing these indicators on TradeStation back in the day, and I think that the probabilities are that we're going to see some similar things that I was talking about in a presentation that I did, but the indicators, I have proof that these indicators have been around for a long time. So I'm going to put that out. Not that anyone actually, yeah, I'm beeping myself because I'm letting some F-bombs out. I'm just really frustrated with what's going on here. But these indicators, we just got a little 1-minute reversal here. The PPMs you can see are turning up. So this PPM 1, 2, and 3 on the screen. These are price projections. Right now we have upward price objectives right now for 41.91, 94, 42.02 on a 1-minute chart. So these indicators, listen, I'm just telling you, they're awesome. I've lived on these things for so long. You should check these out. And it's a one-time fee. I'm not charging subscriptions or any stuff like that. You buy them, you own them, you got them. So, it is on TradingView. But this scenario, what we're seeing here happen from is just starting to maybe consolidate here. And I've also got on here what we call the webs. And so the webs are starting to get kind of crosses. The same thing here on the 5-minute. Let me make this a little bit bigger so that you can see these a bit better. We're starting to get what we call a diamond bottom setting up here. So maybe it'll stabilize. So we're 8 minutes to go. It's probably the end of the session, so nothing's going to happen. We got PPMs all down. Everything looks like it's going to be pretty negative close. Let's go back to TradeStation here, and let's just take a look at, we haven't looked at the NASDAQ down 3.51. This is the monthly NASDAQ. We've taken out the 21, and I've talked about this for a while, that the NASDAQ is leading. It led the way up. It is now leading the way down. And for the NASDAQ, its next target is probably heading for the 40-period moving average. It's at 11,198 right now. That is going up. Let's see here what the number is. It's going up about 170 per month. Let's come down to ground level and let's take a look at the The daily, we're sitting here right now just about on STX for the day, 13,047. Actually, we printed just below it. We're just slightly above it right now, 13,064. So we're definitely looking at acceleration on the downside. We're looking at big time trends down, minus 0.68, minus 0.56, ppm 1, 2, ppm 3 is just about to get into trend mode down. So all of these moving averages are rolling over. Our lower Fibonacci target that we have right here, right now, is for a move. Let me get this right here. Low target is 12,928, so we're almost about to reach that. It's possible that we're going to get some new targets to the downside here as well. So let's go back and let's go back over here and let's just watch this. Let's watch the close here. And I'm going to do something interesting. I do this in the live room a lot. I'm going to bring up, I'm going to overlay over in the corner here. I've got on the far left-hand side, I've got level 2. We just printed a new low on the session, and we got 6 minutes to go here. Yeah, it looked like we're going to stabilize on the 1. We got that reversal, just a reverse of the reverse. We'll see how this thing goes out here as we watch. Just want to make sure we've got the level 2 up there. So we printed 77.50. It's one of the features, and I've talked about this before, is that there's virtually no liquidity on the bid-ask. For several weeks, actually months, we had great liquidity on the bid-ask. Right now, we're looking at 20, 30 contracts aside. You see very erratic behavior on the far left where the level 2 is, and you see it's just moving 100, 150 points, just bouncing around randomly, and that's because there's no size. So when orders of 200 or bigger come in, it's taking multiple. It's taking there it is. Look, new lows just like that. So it doesn't take a lot of selling or buying here to bounce us around with this lack of liquidity. So we traded 76 back to 79. You folks watch the live channel and watch this level 2 again. This is typical where they punch a new low, they bounce 200 points, and they punch another one. There's new lows again. Typically, we'll bounce back to 78. This is the algos doing the selling here, without a doubt, as we come into the last 3.5 minutes to trade. Another new low, down to 725. 67 was RXT, I believe. There's new lows again, 74. Bounce 76, 76.50, 70, right back down again. So if we go more than about 350, 400 points on a bounce, that's usually the sign that we've got a low. But we're looking here, 2.5 minutes to go. Yeah, and I'll go back through some of the questions here. There we go. So we got a bounce now from 4 up to 9. We'll see if that will hold. Sometimes we'll get a bounce like that. That'll be all that we get. Yeah, so we'll go through gold here, Stephen. I'm looking at your comments. They're probably going to slaughter gold. I wouldn't be surprised. It's not looking well. Yeah, I'm dyslexic. You're right, Pepe. Yeah, STX. Thank you. Somebody had to correct me on Twitter as well. So 74 is still the print low. We've got a little bit over a minute. Let's see here what we got left. Got a minute and a half to go with the cash close. I'll come up and I'll look at your questions. We'll talk about some stuff. We'll spend probably another hour together. So we should have opportunity to go through a lot of markets. Yeah, it's probably Bill Gates selling Tesla. He was short 500 billion at once. 500 million at one stage. All right, so here's 74. We, in the final minute of trading with the cash here, should see liquidity pick up just a little bit, but it's not really. There's 100 here on a side at the moment. New low, 73 prints. Lots of heavy selling coming in. We've got one more objective down here. 41.69. I told you about that. We've just about reaching that in a 5 minute. That was the indicator that projected that. There we are, 70.50. Almost there, 69. Boom, right on the money. 69.50, 25 low, and it bounced. There we go. They're just hammering this. Okay, so that was the final couple ticks. We did I accidentally put an order in. Hang on. Glad it didn't get hit. So yeah, we printed down this 725 here on the close, and they're not done. They're still punching them out. So that's usually a sign that the ETFs, mutual funds, those guys are still squaring up trades. They've got a bunch of liquidations. Once the market closes, they reconcile everything. They'll come in the futures and do some additional selling. As I told you folks, back in the old days, that was my job, was to neutralize our hedge fund, try to get us as close to delta neutral at the close based on what we were holding. And it was a floor trading market making operation. And so you had to be able to square up the positions. And back in those days when the futures closed, they were closed. They were closed till the next morning. So it was kind of, it wasn't Globex came in after that. Look at this, 60s print. Wow. So they're still hammering on them. So this activity is exactly what's going on. And yeah, so I just looking at some of your comments here. Let me bring this up on a different screen. It'll be easier for me to see it here. Yeah, so all right, quite the close, a little bit of a bounce off of that 60 print. You got 10 handles. Yeah, 60, 50, all the way up to 71.25. I mean, if you look at that, the far left-hand side, that is pretty amazing here. I'm going to bring back the 5 minutes, getting a little bit of a reversal. The 1 minute is trying to bottom here, but this is just everybody trying to square up the trades there that was going on. So let's go ahead and let me look at a couple of these comments here. See what's out there. Yeah, the airlines. What about shorting the airlines? We'll take a look at that. TLT kind of went crazy. Let's go over to, let's go back over here and get over to this screen here, and I'll look at a couple things. I'll go full screen here in just a minute. Let's do that. So TLT, there's a good chance that maybe the bond market has bottomed. There's a little right shoulder right now. TLT, if we look at this, is the daily. Let's go to the weekly because I'd rather look at that weekly trend first. So weekly, we're seeing PPM still pretty negative. So there's some work to be done on a weekly. We'll need about 2 or 3 weeks to stabilize here. And then there's a possibility of seeing the market start to stabilize and maybe move higher and yields lower. I don't think there's a lot there. The best I'll be able to equate it is to go over here, and we'll go to the 10-year just to look at that. I know that's a 20-year index, but if we look at the 10 real quick here, we're seeing it come down toward the bottom end of the range here. I've got this on screen so you can see it. The range so far for this week is right now 1.84, which is let me make sure I don't have it right. I've got some setting here that is messing things up. So this week's low 2.72, 2.73 was S3. STX is 2.67. I still think we're starting to see the PPMs roll over a little bit, and that is a sign that possibly we're topping out here. We'll probably come back in maybe 240, 250 range is probably going to be support initially, and then some stability down there. But good chance that last week we probably printed the highs. That was up there at 2.95. Don't want anything to do with 3% right now. And I've talked about there's some daily objectives that come up. If I flip this over to a daily chart, there's some Fibonacci projections up here at 3.13 to 3.46. I don't think those get hit up here. And if we've got to take out probably this low over here at 2.66 to negate this upward trend. But you see we're below the 10. Look at the PPMs here. PPM 1 has turned slightly negative. It's flat basically. PPM 2 is still up quite a bit at 0.50. So really what we're looking at is the market stabilizing probably around initially at 2.66, but really what we're seeing here is the possibilities of a short-term top. Maybe it becomes more of an intermediate top that will pull back in from where it's at right now into some decent levels on, maybe, like I said, back to 240, 250. So looking at some other stuff, let's take a and I'm just wondering, I know I'm going to bring ARC up and got Fibonacci projections now for ARC-K for 40, 45. Let me bring that up here. For 45 to 40, and I think if they get under 40, they're going to take that thing profit. They're going to delist this thing. Kathy can't stand the heat. The woman has gone completely crazy. If you listen to any of her, she's talking about 50% per year returns, compounding returns. I mean, I would not want to be her compliance officer. I've owned and operated 3 broker dealers in my life. I've been with a senior executive staff of a large broker dealer, and I can tell you that you don't want people out there saying the shit that woman's saying. It's pretty crazy, actually. So It's it it's it's kind of interesting. But anyway, this is a target for this fund. What that means is that a lot of these, these so-called air quote growth stocks, they're not growth stocks. They're companies that never made any money. Most of these companies will not recover ever. They won't see 2021 highs ever again. And probably 50% or more will actually disappear from the planet. And, you go back to .com. In fact, every IPO cycle that I've been through, and I've been through a bunch of them, in 91, 92 with the biotech was a crazy, nothing like the .com, but it was crazy from the standpoint of what's going on. If it had a biotech name, you could buy it, it would go up. And so every one of those things, we had a guy that was trading on the floor at that time, was at the Pacific Options Exchange, guy named Brad. Brad would come up kicking chairs, and he would be swearing that all of these stocks are worthless. He goes, none of them are making money. They're never going to make any money. It's all BS. And he was absolutely right, but he kept shorting these stocks. And I literally watched him go bankrupt shorting these stocks. And I told him, I said, Brad, you're absolutely right, but you're a year too early. This will happen. And they carried him. He was 100% right, but he didn't have the money to hang out because they were running these stocks crazy. And I told him, I said, you're just getting in their way. You stay out of their way, and lean back a little bit. But that's the same situation that we saw with all these stocks. I have on my trading view, I actually have a thing called Red List is one of my watch lists, and you get stocks like Grow Generation, Global E. I mean, you folks know this. These stocks, Palantir, that's the biggest piece of shit stock ever been around. The Pubmatic, there's a bunch of them out here. I mean, all of these stocks, Fubo, Peloton, Upstart, you can go through them. Similar to the biotech, these were all stocks that came out that got hyped. So I think I put something on Twitter. It's called hype, which is jack it up, crash, delist. That's how it always goes. And probably 50% or more, and especially if they were super hyped, that's one of the things that's going to happen there. And looks like I just seeing here, Amazon Alphabet just came out with earnings. It looks like here. So anyway, but the point of this is that a lot of these stocks aren't going to recover, and I just wonder at what point in time that ARK and Kathy and them ride into the sunset. And if it's not the SEC taking them there, if they just don't take themselves there, I mean, it's kind of crazy. So let's take a look at Tesla down 13%, right? So we got an STX buy signal. Let me go full screen here. We closed under the 200-day, just crushes stock, right? And I see somebody made a comment about the everybody's trying to crush Elon for buying Twitter, right? He doesn't care, actually. Guy will sleep on floors. He'll do whatever it takes to, he doesn't even care that much about money or yachts or all the crud that all these other guys have. Anyway, the point is here is we're looking at all the same kind of scenario where all of the PPMs are breaking down. So if the NASDAQ's going to go down, chances are this is going to get sold too. It's not immune to this. And let's go to the weekly real quick. We are looking at it trading below STX right now, which is 903. And let me bring up this chart here. So we're looking at 875 low, so we could get an STX buy signal if we stay down. I mean, it's early, it's Tuesday, right? So there's plenty of time to plenty of time to recover back above this level. But we're looking also at the PPMs here, and the PPMs are also pretty ugly here. We're looking at, they're still positive on PPM 1, but PPM 2 minus 0.69. Let me move this over. Minus 0.69 and plus 0.65. So the 40 is still positive. So there is some potential support at 908. We'll see if there might be a bounce back here from that level. But, you know, the way I see this is that we're probably trying to move back toward and retest these lows over here, which are going to be at 700. I think we'll do maybe a Fibonacci retracement towards that. But with all these PPMs rolling over on a weekly basis, this stock is going to be weak for a while, I think. Let's take a look real quick at the monthly. See what that looks like. Yeah, monthly, this is interesting pattern. I haven't looked at this for a little while, but we've got this rising 10. It's at 927. I would suspect that the market will stay above the 21,760. 927 could end up to be a range where it gets bound. That would be the bounds it would stay within. And if it gets above or below that will tell us a little more. But the way that the market grid's set up, huge volatility spike, we're probably going to see this market stay. S2 is 907, S3 is 817. Could go that low, but we're also looking at 762 number I just mentioned a minute ago, around that range as an extreme. So that's pretty extreme here from standpoint of where we are right now, but it's a pretty ugly day for a lot of stocks. Yeah, just looking at some comments here on some things here. Yeah, someone asked if the Russell went positive. No, Russell was down 3.26%. Pretty similar to, NASDAQ ended up down 4.66 on the futures. That's where it is right now. The cash went out at 3.95. So we've seen pretty big sell-off since the close here. Let's put NASDAQ up for a minute. Sorry to bounce around here. So right up here was the close at 13,025. We printed down to 12,917, the low 12,805. So we got a bit of a bounce going, but this is a pretty ugly sell-off after the cash close. That's never a good sign. There's a lot of folks squaring up positions that need to hedge this stuff out. Yeah, so let's take a look. Yankee Doodle, I'll see if I can cover that. Yeah, Elon's ego is running it. Actually, his desire to win is driving him, which is the ego, right? So that's okay. I was disappointed I didn't have time to drive out to the Texas Gigafactory when I was out there. Maybe next time. I think I'm back in October again. So anyway, let me look at some of these comments here. Yeah, let's cover Bitcoin. I haven't done that. Thanks for that comment there. Yeah, Bitcoin, listen, it's a risk on, risk off asset. We should all know that by now. I'm actually impressed that gold held up today. The Dow at 102.36. I remember months ago talking about the Dow going to 102. So we'll spend a little more time here. Let's take a look at Bitcoin here at 38 and change. We're also, I'm going to blow this up a little bit so we can see a little better view of what's going on here. We're definitely printing down below STX right now. That number is 38,070. I mean, we're kind of getting into this retest of this 37.8. If we take that out, let's take a look at the weekly. This is actually very interesting. A weekly does not look as negative as you would think it would. PPM2 is trying to turn up. It's still negative. PPM1 is slightly negative. So the bounds here from the standpoint, 37,110 is S2, 35,9. It's going to be interesting to see how this works. I realize it's Tuesday and this is early in this week, but the extreme levels on a weekly basis on the market grid, 34,966, 35,7. Those are the numbers I would watch. You might be able to set up a play off of that. It's going to be interesting if we, from the equity markets, whether we get into this whipsawing. Like yesterday, we had the big reversal up. Today, big reversal down, closed lower. What's tomorrow? Is it just flopping around? We'll have to see how this thing sets up. And it was definitely a really huge reversal day where it was able to, I'm talking equities now, but these are going to be what is affecting Bitcoin, because Bitcoin is risk on, risk off. And we're still, until we take out this number right here, that number is 32,977. If that number is taken out, it will negate this upward Fibonacci projection. So it's definitely, that's going to be your key level to watch for. That, I'd mark that one down. 32,977, probably 33,000. That's going to be a really key level. And it's interesting because I'm seeing some Bitcoin trolls, and every time the market's down, they start to show up and telling everybody that's idiots that's been involved in that and in crypto. And I think it's somewhat interesting when those guys start to come out of the woodwork. They're better than Jim Cramer in calling a call, meaning that, you know, if Jim thinks, I don't know if you remember, I made a comment, maybe it was Twitter, maybe on the channel here, but I made a comment that we had, that Cramer was talking about the market's going to bottom in the next few weeks. And I go, man, this is an easy call to call for lower prices here. And, you know, it's just, I think, pretty amazing from the standpoint of some of these players, and you see them come out. That's why I follow certain people on Twitter and things that I'm looking for, just looking for these crazy comments. Do you remember when Kathy sold almost all over Twitter in the hole? I made a comment on Twitter, you probably should buy Twitter. Well, I didn't know Elon was going to set up. It was probably 33-ish, something like that. She just sold a ton of all of her Twitter up. So it's you can also fade Kathy pretty easily as well. But she did sell a bunch of Teslas, so now all of a sudden maybe she's looking okay on that Tesla sale. But the bottom line is Bitcoin's risk on, risk off. Risk is off at the moment. Anything's likely to happen, but I would watch those numbers that I just mentioned. Those would be areas you want to watch. Let's go to gold since it's bear with me a minute. I've got a near futures, a custom near futures it's calculating. It's taking a little longer than I would like it to. So maybe it's not going to come up. Okay, so there it is finally. Okay, so gold, I've been positive through this pattern. We had that rising 10 period moving average through right over here. Let me draw that in so you can see it. But we had this rising 10 right here, and now we're coming down into a critical level at the 21, which is at 1881. If we don't hold that, then we're probably just going to roll over all the way to 1844, potential coming all the way back into these lows, and we're looking at 1790, retest of 1800. There was a point there where everything was looking like we were ready to roll, make a new high. I remember talking about this on one of the live streams that I did, and then we just got a complete failure. And a lot has to do with what I'll show you next here, which is the Dower. So that's going to be critical levels there on that standpoint. Let's take a look at these are the numbers that I was talking about a while back. The Fibonacci targets 102.03. That seemed pretty crazy because when that calculation came out, the Dower was at 96.08, and the objective 102.03, 104.85, 106.60, and we're looking at some serious acceleration to the upside. So it does look like the Dower's got more in it, possibly 104 plus. So that can't ultimately be good for gold, although I'm impressed that we were up 0.60 and gold was able to print a 0.45. So we've seen this happen in the past several cycles, that the Dower and gold can run together. So that's not unusual for that to happen. Yeah, I'm sure Jess Yates, that Google's down nearly 5%. Down 7.69% right now, 2272. So, yeah, that's a pretty big number here. Let me see if I can bring up a different chart here. We'll bring up stuff. So, somebody had a comment earlier, and I said I would look into that. Let me just look back for a second here, folks. Yeah, Mary, I guess might be worthless, but it's right here you go. Dollar's going vertical. Angle of attack, huge numbers, 0.63, 0.30. So don't get in the way. Yeah, so let me see if I can find something, and I'm trying to find. I think, yeah, Yankee Doodle. Give me that symbol that you want to look at, and I'll cover that actually. Okay. And I'll show you how to build some things up. Yeah, it's funny. I made a comment one day on the channel. You can sell the market under 20 VIX and you buy it above 30, right? And that's been the way to go. CFG, thanks, Yankee. Okay, so let's build this from scratch because your question was, how could the indicators have helped you? Let's see what it's doing. Yeah, a couple things that I will show you here. We'll put CFG over here as well. So let's take a minute out and do that. This is weekly. Go daily. Yeah, so right now I've got TradeStation up, but I'll show you, I'll build this up. I just want to look at this. So let's build this up. So that we're going to go into, so if you have the indicators, you go in here and you literally go over here to my invite only scripts. That's how you get to them. And first I'm going to put PPM 1, 2, and 3 in that order. PPM 1, 2, and 3 on. And then I'm going to put on our Fibonacci projection tool. I'm going to put that on, and I could put market grid up here if I wanted to. I'll put it up there for a second. We can turn it off and then see if there's anything else I want on here. One of the things I want on the market grid though is this. I'm going to go into settings and let me move this over. I don't want it on market grid. I want it on the fib ratio. I want to show you something. This is like super powerful using these indicators, okay? And if I come over here and I put up here, show the pivots. These things are like crazy powerful here. I'm going to blow up this stock, and then I'm going to do some stuff on. So we're looking at Citizens Financial Group, okay? And number one, the last pivot we have, there's no Fibonacci projections down here right now. There was a pivot up here at a high pivot, which happened on the, hang on one second here. The high pivot right here was up at 40.66, and we didn't have any Fibonacci down on the daily, but let's take a look at the weekly, because I suspect that weekly is also got some challenges in it. And I'll show you a couple things here. So one thing for sure, if I was at all the PPMs on a weekly basis, let me move this over so we can see this just a little bit better. PPM 1 signaled up here at $48 that you probably shouldn't have owned that thing anymore. Actually, most of these sells are coming in at 50, just looking at the numbers here, closing 55 plus, where everything was rolling over. And in fact, none of this was in trend mode here. So I don't know if you own this thing or not, but we're just looking at this pattern. The only thing that's happening here now is we are getting what I call a bubble bottom on the market grid. Let me bring that over. If you notice, we get these little rounded bubbles or an expansion of volatility. So there's a potential that this thing is setting up a little low here down at these levels. So, but this is on the weekly, and we go back to daily. We'll see. I'm just trying to change the scale a little bit so it makes some sense, so you can see it a little bit better. And matter of fact, let me do something, because these don't need to be that big. There we go. That's a little better scaling. So we traded down today to STX, and that number down there is STX 39.96, the low 39.97. So it went right to STX today, and a little bit of a reversal yesterday. But PPMs are all rolled over here. So you're looking at PPM1 here is at these are a little small, but PPM1 is at a minus 0.44, minus 0.55. So all of this stuff has been negative in here. Here's the pivot that I was talking about, 45.34, and everything PPM 2 and 3 never got into trend mode. So this here was most likely a correctional phase. So there's a couple other things you could probably put up. You could go back to indicators, and maybe there was maybe a cycle that you could have been watching for here. And no cycles hitting. There was a cycle low that came in over here, but nothing on a high level. So there is a pivot right here, though. These dots are fairly small. I'll just tell you what the number is. But a close below, just trying to find the value here in 1 second. Bear with me. I don't know why it's hard to find. Oh, there we go. Hang on. Sorry about that. It's going to be a close below 30, right where we close, 39.97. A close below that, you're going to get another swing low, which is going to suggest the potential. I'm going to, for the next level, here's a brand new Fibonacci projection right now. We're looking at least down a minimum down here to this first level is 3470 possibilities. Yeah, this stock's got potential, a lot of downside. So this 97 is the critical level. So you can use these tools to try to find exactly what patterns are setting up. And I'm going to show you one other thing here. Give me just a second to put it up here. So let's go over and put that. Let's put CFG. So I'm getting deep in here on CFG. Citizens on WaveTech has currently on a weekly basis, it's sold out up here. it bought it, and when it failed, it sold it out. We'll look at exactly where that happened here in a second. It sold out at 47.7. If we flip this to a daily, let's just see what we can do there. Let's go to a daily 1.2. Yeah, so same kind of deal here. Our daily models exited this. Let me bring that up just so we can see that real quick. Yeah, kind of a deep dive here on this stock, but sold at 51.60, sold out on a daily basis, and it currently does not own this stock since then, so it hasn't bought it. So this is why, like I said, we never got into an uptrend mode. On a short-term basis, we saw this rebound right into the 21-period moving average on the daily, and then then it just collapsed back down to low. So possibly if we set up some structure here, this stock could be a buy down here, and it's got to hold, like I said, that 39.97. So you got your money's worth on that analysis there from that standpoint. But the way that the indicators are going to help you with this is to give you the perspective of what was going on here just on a pivot basis. There were some points where the stock was looking like higher. I didn't put this up here, but if we go to indicators, and I've got a script that I built, we'll put that on there. You'll see that all of the angle of attacks have been down for a while in this stock. This is daily, so it's all rolled over here. This is the 21-period moving average in the middle coming down. Everything's negative. That's what the PPMs are telling us from that standpoint. Let me make that just a bit bigger. We'll pull that down into scale here. So now you can see that this cyan line is the 21 and the red is the 10, but we never got into trend mode. That was down well over 0.89 at the time. So this little bounce, if you did try to buy here, then we're still looking at setting up a pattern. And that's the way when you're using these indicators, is the best way to get a feel for these. One of the easy things are you get the indicators and you have WaveTech on there. WaveTech's an old clunky platform, but the engine runs. That's the charts aren't fancy, they're not modernized. We're working on actually doing that right now, modernizing this platform. This was a platform I brought back for retail. We have another platform, our Pro platform, which is Portfolio Expert, which is a desktop version. But if you have that, you're going to know when you get these buy signals in here, you're going to be able to break them down with the indicators. It's pretty powerful to have those kind of tools with you. It's the stuff I've used forever. Yeah, Jeff, what fund do you want me to look at? Give me an exact symbol for it. That'd be cool, Yankee Doodle. We have a lot of fun. Very educational. I get deep into some stuff behind the firewall. But yeah, this pivot down here though is a big number here. So we just hit that first number today. Yeah, Scott, it's a great question. We're actually looking at doing that. I'm also looking at doing a live conference in Arizona before, We'll see if that happens or not. We've got a couple things that we're working on. But we are going to start doing some of the Wave Tech training as well as Portfolio Expert. Yeah, gold is still going up here. See, GC's at 1906 now, up 0.55. All right, let's see what time we got going. Yeah, we got about another 15 minutes. Let me look at. So I see Voters 01, utilities using renewable like hydro. I've talked about this before. Arizona is one of the greenest places you can live. We're hydro and nuclear powered here. We have nothing else. No, as far as I know, there's no major or any kind of gas generated electricity going on. We got sun glow, lots of big giant solar fields as well. Some wind, but not like in California, just across the line. Yeah, it's kind of interesting on this SOXL, the semiconductor. This is a weekly chart. And you would think, right? You would think with a massive shortage of chips that these companies would be doing wonderful. They just would be making money hand over. They're not. I think it's kind of interesting here. It's going to be a long time before we see 21 highs here for sure. It's not even close to bottoming. There's still acceleration going in the downtrend. Maybe this 200-week moving average, maybe it'll mean something. I don't know that it will. So I don't really see that going anywhere good soon. And even just looking at this weekly chart, if it stopped going down right here and stabilize, it would probably take 6-8 weeks of stability down at this price level to set up a potential bottom, maybe get the PPMs to turn around. So this continues to be, I guess, it continues to baffle me. I have some folks that I've done a lot of business, matter of fact, in the process of building a new computer. And if anyone's interested, I don't have a link, I'll just have to give it to you. But digitaltigers.com, they have built all my trading equipment for the past decade. They're amazing people. If you want, you can get, I know a couple people in the live room have already stepped up, bought some computers. If you're looking for a new box and a super fast trading box, these guys, I think they used to have a deal, and I think they still do. I talked to Jeff the other day with TradeStation. You can get a discount. You can also get Kindle 5. If you give them that code, you tell them you know me, you can get 5% off. And they make some really good high-end boxes. They're not off-the-shelf stuff, and you can customize and spend lots of money with them. But for the most part, their trading boxes, are between $2,500 and $5,000. You can trick out something big. So if you're looking for like a high-end trading box, that's somewhere to go. It's so I guess that's a paid commercial, I guess. but not really paid. I've just got negotiated a discount for you folks. So anyway, yeah, go there, digitaltigers.com. Tell them that I sent you, and Kendall 5. So anyway, really just thinking about this, and the reason why I brought that up is this: is one of the guys there, who's one of the founders of the company, was telling me exactly what was going on with the semiconductors. We were talking a couple of weeks ago. I was putting an order in for a new setup, and it was pretty amazing, as he was telling me everything he saw step to step, the shortages, the prices, everything that turned. And I looked at the dates while we were talking. He absolutely called every turn in the semiconductor market. And he said, he told me back in this, back in, fourth quarter of 21, that all of a sudden there were plenty of chips around, all that stuff. He also told me something else, that AMD had been way ahead of Intel, and now Intel has taken back first spot. As long as you use Windows 11, some of their new chips are way faster than any of the, even I believe the Threadripper series as well. They've got some monster chips out there now, but you got to use Windows 11. I've got a laptop I updated to Windows 11. So far, so good. I haven't seen anything too weird on it, and it seems to be pretty solid. I haven't put anything here in this trading room that looks anything like that. So, but that's that's why I brought up the Digital Tiger guys, because he called everything. So I'm going, Jeff, we gotta talk more often, because you called everything he told me. I went through, or from going back to 2020 and even before, he just walked through, because they see the chips from a manufacturer viewpoint on what's going on, shortages, prices, all of that stuff. I thought it was phenomenal. I said, you should be a semiconductor analyst. I mean, it was amazing how accurate he was. Anyway, so, but back to this fund. I mean, I don't know. Not really good on this one. Yeah, Final, I will talk. You're talking about Jay's Friday fireside that he did, correct? I will see if he's got that, and we'll get it posted on YouTube. It'll be an unpublished link, and we'll put it out there. And I'm going to start doing some stuff in the room with him coming up pretty soon. As soon as I get back stable here and get through this week, probably next week, we're going to start doing some training. At some stage, folks, the market's going to bottom. And when that happens, especially if we get down to some of the levels that I talked about earlier, if you're watching, then what we're really looking at here is probably almost a 2020 playbook. If you were around me early in 2020 when our model started buying, we had tons of accounts that were building portfolios that were up 200+%. And if they do knock this market down hard, with all the people, the dynamics of the markets have changed substantially with volume. We did 6.5 billion shares today. I'm just looking at, and it was up 4.5–5% today. So maybe let me bring that up on screen here real quick. Yeah, so one of the things that I look for, I've got right now, I'm going to go full screen so you can see this, just kind of go down this rabbit hole, is this is a volume chart and it's got market grid on it. It's got PPMs on it, all that kind of stuff. And it's interesting to watch this. And we just had a spike in volume. This is a weekly. Let me go to daily here real quick. Yeah, so on the 18th, what day was that? Monday the 18th was the last spike in volume that we had. Here was a big spike back on 318. And then that's interesting that the spikes, we got 418, 318, 24. Yeah, it's interesting. Right around the 18th of the month, I don't know, maybe that's expiration. Let's see if there's another one. Here's 17. Yeah, 17, 18, we get these spikes in volume. The reason why I bring this up just quickly is I usually look, if we had a big down day and volume spiked, then it's possible that this was climactic. But this was just actually another average day of, we're right at around the 10, 21 day average of volume right now. So there's really nothing there from the standpoint of, sorry for all the noisy cars if you're picking that up. Anyway, the volume is, I don't use it very much, but I do look for big days down. If there's spike volume, something like that, I tend to go with that. When you have big up day, big volume, that doesn't mean more big up days. It means usually a climactic where it just printed up there. Everybody capitulated, short covering, whatever. Same thing on the downside. If we had got a big spike today, that would have told me this is, and low volume. I have to tell you, if you look at most trends from the standpoint of what goes on within a trend in volume, you'll see that the lower, not too low, but the medium to low volume is a very sustainable uptrend or downtrend, doesn't matter what it is. The moderate volume and low volume, when I hear people, well, it's going down for multiple days on low volume, that all that means is there's a lack of buying interest and there's not a lot of volume. And when you have a low volume rally or low volume sell-off, they can go on for a long time, and they typically go a lot longer than you think. So let's see. Let me look at a couple comments here. So I'm gonna wind down here. Yeah, I'm doing a stream tonight. Somebody just asked. Yes, I am. Yeah, I just wanted to light the screen up, hang out. Yeah, I don't know if there's anywhere to hide right now. Somebody's asking, is there anywhere to put money? Right now, cash is kind of king, and that's what we're looking for, some kind of print that might be able to tell you there's places to put money. It doesn't have to be mainstream. We were hiding out for most of this year in the oil patch, and that was very good place to hang out. In fact, if I can bring the, yeah, I'm not going to go there, but I'm going to wind down here. So yeah, the dollar is king right now, right? Pretty odd, I would have to say, looking at the backdrop. But yeah, so I'll do a stream tonight, as always, 9:30 Eastern. Like I said, the link is on the screen here to get the indicators. I actually saw a couple orders come in, so thank you if you're still on. Appreciate it. Make sure that you get the link to get into the live trading room. You get a free month of the live trading room as well. And I think when you start to use these indicators. I mean, we're just getting great feedback, especially if you're spending some time with me in that room that we're going through and setups and doing real time off 1 minute, 5 minute charts. So you get a lot of experience and just hanging out in that room. And sometimes we have a lot of fun trading. So, yeah, yeah, it was interesting. I had to get an Uber the other night, and the guy driving the Uber, friendly guy, asked me what I did and stuff like that. And he started telling me his buddies are all saying Raytheon, at the war machine, buy Raytheon. So I thought it was kind of interesting. What do they used to say back in the 20s and 30s when the cab drivers are giving you investment advice, then something's really wrong. So anyway, just looking at comments here. How soon? I don't know, Bo. I've been out of touch. There's actually, it got more complicated because we have to put a separate server together to authenticate the TradeStation indicators. It just, I don't think it's going to be that hard. It's just a matter of getting done there. So hopefully soon I will re-engage with my IT folks and programmers and see if we can get things rolling again. So thanks a lot. We'll see you guys tonight, guys and gals, at 9:30 Eastern, same channel. So we'll see you soon. Talk to you tonight at 9:30. Thanks a lot, everyone.